Okay, so welcome to our daily market review and analysis. Thank you for joining me. We are making a start today with a session covering the euro pairs, but in particular, as market has been very mixed and very confusing in the last few days, we will probably spend more time on looking at potentially a dollar index and then try and find a likely market direction or a bias in the days to come, recognizing that there are several developments taking place in the next few days. For example, the situation with the Cyprus is still ongoing, and tomorrow we have several UK-based financial the data news release, and also the UK budget is being released tomorrow later on in the UK session. So we'll start off with the Dow Jones Industrial. We'll look at the equity market generally, because sometimes we are able to identify the market direction in the equities, and consequently as equities normally have a negative correlation to the dollar index, we are able to get a bias. But in the recent time, we found that the equity market is rising along with the dollar in general, and so this has become a little bit difficult. Nevertheless, this kind of out of sync market doesn't last for too long, so they will go back to their normal relationship, but sometimes we find that they are out of sync and therefore they don't offer a great deal of guidance. So recently we have been finding that we've not gained a great deal of advantage in looking at the Dow Jones or any equity market for that matter. However, it would appear that potentially we have this wave starting from the low in November as complete, in the sense of this being wave 1, wave 2, and then we were working on this wave 3 here, which is minor wave 1, minor 2, minor 3, minor 4 and minor 5, and we are retracing for wave 4 of this cycle degree. So we are expecting that this current decline will continue, and if that market continues to come down over the next few days, maybe for the remaining of the week, we may well see Dow Jones Industrial pulling back to something like 14,200 or so, and that would suggest that in that circumstance we would expect the dollar index to continue gaining against the other US dollar pairs. So if the equity market is coming down, the dollar index will be rising. So that's the impression we get from looking at this equity index. And then also we look at the oil index, and the oil index should normally also do the same thing that the equities are doing. So in this particular case, for example, we've had a decline and we've been retracing, and it appears that so far this retracement to the upside could well be 5 waves. It's a little bit difficult because of some of the waves with gaps and overlapping, but here this one potentially could be wave 1 and 2, and then this one could be wave 3, 4 and 5, or we could even have a situation like this. We got wave 1 here. Let me just highlight that in green. So that's a wave 1. Then wave 2 down here. This could be potentially wave 3. Then we have possibly a flat, so that will be wave 4, and then finally thrust up as a wave 5. So that could potentially have completed the 5-wave sequence, so we could label that one a wave A. Now we expect a retracement in the form of a wave B. So if that happens over the next few days, then that will also be in harmony with the equity market coming down, and then we'll see another leg up. So basically after this decline, we are looking for A, B and C. A, B and C to the upside before we complete that retracement, and then we get another leg lower. And if this market declines for a few days, then that will mean the equity market is declining also, so we would be in sync with the equity market, and then the dollar index will probably continue higher to sideways. So let's see what the dollar index currently is showing us, and we'll come back to dollar index in a moment to look at in a bit more detail. So from here, and if you managed to watch the recording from yesterday, we were expecting this decline potentially to be like a wave 4, starting from the low here back in February, early February, 1st of February. So we've got a wave 1 here, wave 2, and then this one completing wave 3. Then we have possibly an expanding flat, so the wave A, B and C, like that, A, B and C, to give us wave 4, and then possibly now working on a wave 5. And in that wave 5 we probably already got minor 1, minor 2, and we are now developing this wave 3. We might get a proper development of a 5 wave to the upside with possible target of around 84, or we might see like a triangular, like a rising wedge kind of a finish, like so. And if that's the case, then we've got 1, 2 working on 3, we might get a small retracement for 4 and then small 5. So in other words, overall we might not get a significant higher high, but we are looking like forming this final sequence of these 5 waves, and we might get a complete top which could be in the region of around 83.50 area, maybe 83.50 area, or it could carry on till about 84. So whilst the equity market is declining, we expect dollar index to be moving to the upside, and during that time most of the US dollar pairs are likely to lose out against the dollar, would decline against the dollar, particularly like the Euro, Aussie and New Zealand dollars, and Canadian dollars and Swiss dollar Swiss will continue along with the dollar to the upside. Okay, so we'll come back to that in a moment. We'll look at the Euro pairs first of all, and maybe a couple of other charts, and then we'll come back to dollar index in a moment. So the Euro pairs, the first one we're looking at is the Euro Pound, and in my analysis, the Euro Pound from the bottom has risen in what appears to be initially the minor 5 waves here to give us the wave 1 in double parenthesis, double bracket, wave 2 in double bracket, and then since then we've formed wave 3, and that was like 1, 2, 3, 4 and 5. So wave 3 in double bracket is complete. So now we are actually retracing wave 4, and in that process we've got wave A, which is complete. We have now made a high for wave B, and effectively now we are coming down in a wave C, and ideally a wave C could drop down to previous wave 4. So we are looking for a target of around 0.8450 area, or maybe a little bit lower, and in which case we would probably find price action coming back into an area where we've got a rising trend line support potentially to play in, and also it is going to be approximately 61.8% retracement of this last leg up. Okay, so we are expecting that to come down, and it would happen in one or two ways. One would be is that Euro continue to be relatively very weak, and the pound remain reasonable stable, and that would suggest then that the Euro pound chart would form a new low around 84.50 to 84 area. So potentially any position on this one should still be short, but that would be considered as a counter trend move because the overall trend is still to the upside, and therefore better trade would be that once this one bottoms out is that we go long, which will be in the direction of the overall trend and would also offer us maybe higher reward than where the price is currently, unless of course if you are short already, and in which case you just got to manage your position. And because we're in a wave C, we should have that in a 5 waves. So if I'm now looking at this, then it would appear to me that this is possibly minor 1, minor 2, and we're in the process of forming minor 3, and that minor 3 could be that 3, 4 and 5, or more likely 1, 2, and then we are developing wave 3. So we would have 1, 2, wave 3 coming down, 4 and 5. That would complete this wave 3. We'll probably have another retracement and then finally another leg down to eventually come to the area that we are looking for. So in the meantime, we would continue to remain biased to the downside for euro pound. Could be something like that. So we'll continue to seek downside support to around about 84.50 area, and at that time we should then expect noticeable divergence forming on the 4-hour to suggest that the momentum to the downside has ended and that we are now going in the upside. And then you can see on the RSI on the daily we've got no divergence and it's a strong movement to the downside. But on 4-hour we might begin to see an early sign of divergence forming, but at the moment there are no significant sign of divergence yet, and we have quite a bit of a downside target as a development of this wave count to suggest a low to be much lower than where it is now. So euro pound mainly down. Then we look at euro CAD, and the euro CAD for a long time we've been trying to seek a possible entry to the long side. So we have come back to the baseline of this rising trend line connected from the low of July and continuing to support these higher lows along the way on the daily chart. So we've come right back into that area, and horizontally we've come into an area where we could potentially expect a support, because here for example we had a resistance and we came back down, went through. So now we would expect potential support in that area. And also looking at this price action in comparison to this last thrust up, looks very much like a corrective pattern. This one looks a lot more impulsive. In the same way, these here subsequent series of higher high and higher lows looks quite impulsive. This is very strong impulsive, but this one coming down has taken such a long time and it's been a big overlapping wave. So this one, just looking at it daily, would look to me like this is some kind of wave A, wave B, and we are now coming down in a wave C. So that would somehow complete the correction. And in terms of the actual wave count, we might not be very accurate, but I think this is possibly a wave 1, which is basically a 5-wave pattern. So what I should really do is this one should be wave 1 in bracket, and then we should have this one as wave 2 in bracket. So we've got this 1, 2, 3, 4 and 5 to give us wave 1, and then we have had a complex correction for a wave 2, and then this one is a part of a wave 3 at the moment, I think, and as such it will be minor 1, minor 2, and then we should get a very strong rally on a wave 3 to the upside. So it's a question of finding that bottom, and probably we might get a bottom very soon, or the euro will probably need to form a bottom against the dollar. But it's possible that if the Canadian dollar is weak, we might begin to form a bottom against the Canadian dollar, and then see on the RSI. At the moment there's no divergence on the daily, but on a 4-hour we are beginning to show some early sign of divergence, but it's very weak at the moment. So we may have to wait for a little bit longer before a possible entry long can be triggered, but it is a very strong probability trade which would provide us with a long-term swing trade. And if you look at it overall, we've been declining quite noticeably, then formed a low in July, and we have gone up, and so far we've overcome an area of previous support and resistance. We have come back into that area as a support. So if that holds, then I think there is going to be an excellent chance of a trade to the long side. But at the moment we are currently forming this last leg down, and it could be this kind of a falling wedge pattern to finish off. And if that's the case, then this could be wave A, this could be B, this one C, D and E. So we don't have a long to go, but I think there is a possibility that we might see another minor lower low forming, and that might complete the overall count, and in which case we might even breach this rising trend line, but possibly only momentarily, and then we should see price reclaiming the trend line and then moving upward. So Euro CAD is still potentially long trade, but it's not quite ready yet. And likewise, if we look at a Euro Swissy, we won't really look at it because there is very little point in trading this, where, you know, although recently we've had some movement, but in the main Swiss National Bank has pegged the Swiss franc with the euro, and therefore, you know, it's not really worth trading this, because sometimes you will get a very strong up and down movement. For a long time it was just flat and suddenly we burst into life, but I personally would not want to trade this. So there is very little need in actually analyzing that. Now the Euro New Zealand, like the Euro CAD, also substantially, you know, declined over a long term, and I think it has formed a low. And then if you're looking at it now, this is a very strange looking chart in a sense of we could possibly make a count of wave 1 here as a minor 1, minor 2, minor 3, minor 4 and minor 5 forming a wave 1, but then this rest of it is an absolute mess in a sense of such an overlapping, and really one would have a difficulty in knowing exactly what's happening. So this could be wave 1, then maybe I've got A, B and C like an expanded flat, so then we would have wave 1 and wave 2, and then possibly in the sequence of wave 3 we've got minor wave 1 in single bracket, probably in a process of forming minor wave 2 in single bracket, and in which case then that 2 is ready to take off as soon as the low is formed. Or we've got some strange looking pattern, but nevertheless I do expect Euro New Zealand also to bottom out somewhere in this area, and then we may even have a situation where we've got wave 1, and then we got like a wave A, then complex pattern up there as a B, and then this coming down as a C, and we'll finish up with wave 1 here and wave 2 here, and then starting off with a wave 3. So either we'll be starting off with a wave 3 or we'll be starting off with a wave 3 of 3. If this is 1, this is 2, then in the next cycle we've got 1, 2 and 3, so it will be 3 of 3. Either way, we do expect a bottom to form here, and then quite a long-term swing trade to the upside. And I think really euro will have to stabilize before we can get a, you know, bottom confirmed. But for the short, you know, time, it looks like the Euro New Zealand is still declining, and we might get another low maybe in the region of 154.50 area to maybe 154.35 area, which will be the same kind of a low area around where previously we had a series of lows. Also it would appear that this, what I've drawn here, is a short-term triangle, and if that is a short-term triangle, then maybe in the process of coming down we've got wave A, B, because this triangle only happens in a wave B, and then that would suggest that wave C would be the final move to complete this retracement, because after this triangle we get a final move which ends the current trend. So I am expecting a bottom to form also in this Euro New Zealand for a long trade. Now you can't trade all Euro pairs, so the idea would be is that if they're all going to bottom similarly, like Euro CAD and Euro New Zealand and maybe even Euro Pound, sometimes they will be slightly staggered. So some pairs will bottom first and the others will bottom shortly afterward. So in this particular case, I'm expecting maybe Euro CAD and Euro New Zealand will probably bottom together, fairly close to each other. So one would help to confirm the other one, and that way we can still monitor these even though we're only looking for trading one particular currency, because we don't want to have a lot of positions in a currency with all euro factors in them, because anything happen to the euro would then affect the overall portfolio of your trade positions. So Euro New Zealand potentially still forming a bottom, still got some more downside like the Euro CAD, and then the Euro Aussie is again in a very similar state, although that too is now causing me a little bit of grief, in a sense that we originally identified this as a wave 1, then we had this expanded like a running flat, so we got wave A, B and C as the wave 2, and then I think we've got, or what I thought we had was wave 1, and this is wave 2, but the wave 2 now is come down so deep into this area. Technically it is still valid, because in a sense you can get almost 100% retracement, but not more than 100% retracement. So again we are coming very close to probably forming a bottom. On this one, on a daily, we do have a potential divergence. So that way we are in an area where potentially we could bottom out, but in terms of comparison of the way the markets come down compared with the rest of the price action to the upside, this one you can agree with me that it is very overlapping and very laboring, except this last move is where the momentum has been fairly strong, but otherwise it's been very overlapping. But I think we will be looking for forming a bottom, and I think this week could well be the week where euro will bottom against most of these currencies. On a daily chart, we have come back into the area of this 200. I think this is the 200 period moving average. On the euro US dollar, I think it has marginally breached that today, like we've done that over here. But sometimes you get a marginal breach, like over here we had a marginal breach of the same. But broadly speaking, the horizontally in that area, I think there is a potential support and probably will materialize. So again, the Euro Aussie could be another one for potential long entry. Some of this trend line that I drew is no longer currently valid at the moment, so we might have to reconsider what we do with those trend lines. But nevertheless, we have there is a likelihood of a bottom forming in this area. Divergence from the RSI, at least from the previous lows, but in the current cycle, which is a cycle starting from here coming down, there is no divergence on the daily. If you look at the 4 hour, then on 4 hour you can see we have started to form an early sign of divergence in this area here. So I think there is a possibility that we could form a bottom fairly soon. In terms of the wave counts, I think this is very complex, very overlapping. So I won't spend a lot of time on that, but just as a quick glance, I think that this one is an A, B and C, and that possibly gives me a larger wave A, which I would put in a bracket to show it's a larger A. Then this one again looks like a triangle, just like the one that we noted in the Euro New Zealand. So it's a larger wave B, and then we are in a final wave C, and a wave C we got wave 1 possibly, 2, 3, 4 and 5 maybe. So in some kind of a final development of that downside, and in that last wave we probably got almost like 1, 2, 3, 4 and 5. So I think on the Aussie and CAD we should probably not even wait for a Friday. We might even get bottom forming soon, but if not, certainly by end of the week I suspect we should have a bottom, and pretty much a bottom formed before we take this one out. If we do take that one out, then we would have to reconsider what these waves are, and maybe we've got one here, then we have wave A, then we've got A, B, C as an expanded flat wave B, and coming down as a wave C, although I'm not very keen on that. So we'll have to see what happens over the next couple of days. But if you ignore the waves, then possibly just looking at pure technical divergence on the momentum on a daily, and possibly an previous area of horizontal support. So we're coming back into that area. So we should form a bottom in the area of 123.50 area. So I'll be still looking for a long, and then like the other one, this too is sort of coming down so heavy, and then after having formed a low, we are in a process of forming that bottom. Maybe even this one would look like a head with a left shoulder, and this one double, kind of a complex right shoulder, and we should be really making move to the upside. So there is a strong potential for some of these currency pairs to give us fantastic long-term strategy, and when they get going, you can imagine the kind of wave we would have, because if this is wave 3, what we think is going to be, then it'll be a lot more stronger and much longer than this particular swing that we had. So we need to keep that under watch to find bottom forming on New Zealand, Euro New Zealand, Euro Aussie, and Euro CAD, and I think they're all in a very similar sort of state, whereas in the Euro Pound we've probably got a bit more downside yet to follow. And then exactly in the same way we looked at the pound yesterday, and if you look at the pound CAD, then pound CAD is potentially also in a form for, sorry, let me look at the pound CAD. Pound CAD is almost either has formed a bottom, because if you look at the RSI, it looks like we've broken above the resistance line on the RSI, and I have the feeling that we've already formed the bottom on the pound CAD. So if you look at it in a shorter term, then possibly we've got like this wave 1, wave 2, wave 1, wave 2, and then 3, 4, and 5. So that would complete a wave 1. Then we've got A, B, C as the wave 2, and we've started a new leg up. Or we might have a situation where we've got wave 1, wave 2, and then we've formed 1, A, B, C, 1, then A, B, and C as the wave 2, and then we've started a second cycle. So really I think we are basically in a higher high sequence of higher high and higher low, and whilst we hold the trend line, then potentially we are developing a new uptrend. So it'll be a question of finding a suitable area for entering long position, but I think the bottom in the pound CAD is already in. So for the time being, you see RSI is forming a high in that area, so I think we're in the process of developing some further strength on 4 hours. So this could be wave 1, this is wave 2, and maybe developing wave 3, in which we've got first wave back down, and then so I think really speaking we should be looking for long entry on here. If you look at this down trend line also on a 4 hour, then you can see we've broken above that price action on this downtrend trend line, as we also confirmed on the RSI on the daily. So I would be looking to get long on this one, but we just need to find a suitable area where we are able to long it without taking a huge risk on it. So if, for example, we get a pullback to this rising trend line at the bottom, then potentially we could be looking for a long entry in this area here. And then horizontally, if we look at this area where we had a previous area of support, so we had a support here, It's support there, and this area here you could consider maybe that some kind of a complex left shoulder head here. Then maybe what we would have is this price would continue higher, and then once we finish the 5-wave sequence we'll get a reversal. So that reversal can probably come back all the way to this area. So for longer term swings, I think that's the area we would be looking at to get long. But in a shorter term, you could drop down to, you know, like 1 hour chart, and if you get this one, say we've had this leg up, we get A, B and C. So if you get minor move like this one, then you might be willing to go long on that with a stop below here. And then in terms of the overall risk, you'll still be looking at 70 80 pip stop loss, initial stop loss, with a view that then you'll be looking for a retest of this area here, approximately around 159, 156 if you want to make it like a round number, 156. So potentially you'll be looking at something like 120 or so pips, so like 2-to-1 ratio. But ideally what I really would want, and because this currency pair, as you can see, is very wild when it does move, and at the moment is in very nice clean rising trend channel. So I suggest that once this 5-wave move is over, we should get a a retracement, and that would be a better place, because one, we would have confirmed we're in definite uptrend. We'll get a retracement which will be ABC retracement, and we'll have some Fibonacci retracement, something like 50% or so. So we'll come back into that area. So ideally I would be looking for a long entry in this area here, and that might take a little while. It might not happen immediately, that one take a little while, but ideally 154 to maybe 154.50 area, and we should then start moving up very strongly after that. So pound CAD is potentially long if you want to trade that on a shorter term. Otherwise wait for completion of this minor wave 1 comprising with an internal 5 waves, retracement back down, and then possibly look for long-term entry. Similarly, pound New Zealand is also a long-term entry, and I think this congestion here is probably going to be ending soon, like so. So really speaking, based on the price action, I am looking for maybe one more breakdown here, and then we should be looking for long entry in that area. So if we get a retracement or a pullback back to 182.30 to 182, approximately 182.30, then possibly we are in an area where we can consider long entry. So I think the pound is ready for long entry, but against the pound New Zealand, we just need that final decline, and same with the pound Aussie. So that would suggest that the Aussie and New Zealand dollar and Aussie dollar will within the next week or so become relatively weak against the pound, and also then against the euro fairly soon. So those are the charts that we want to look at. So euro, and the final one on the euro is the euro yen. So on a euro yen, at the moment it looks like we're in some kind of a triangle formation here after having risen sharply on this wave 3. So this triangle could be a wave 4. So once that finish, we should then move in for a wave 5, and I think that again would be unlikely until we find a euro bottoming out against dollar. So we've got a bit more downside. So maybe a long position, if you were looking to go long on a euro yen, then maybe around 119 or 120 area, I would say, as a sort of a round figure. That would be like A, B and C retracement. So you could look for considering going long 120, and your stop then would be below this little spike low here. So looking for something like 100 and if we get a move down to there, then you're looking for like 180 200 pip stop loss initially, but then we are looking at this on a daily chart. But you might be able to narrow it down. If you get dropped down, you might be able to find another lower low here in the current sequence. But if not, then you'll have to keep your initial position, so that couple of hundred pip stop initially. But the upside is also quite strong, because even if it simply goes back from here to retest the high, then that is something like nearly 700 plus pips, maybe even more. So, you know, risk to reward ratio I think is not too bad, and it is possibly going to be a triangle, you know, A B C kind of a triangle formation. So we would consider going long on around 120. Around 120 I think would be a good idea. It would match with the fact that we are getting on the RSI, we may also get like a triangular shape. Okay, with the triangular shape here. So I think Euro Yen could be potentially long entry. So we'll now go over onto the dollar index chart, and on the dollar index we're looking at is well, let me go through the other chart first. So here we've got a pound against US dollar, and as I was saying, I think the pound has already bottomed and we've moved off here. So it looks like so far to me that we've moved off, and this here is a first wave up, wave 2 down, wave 3. This here is a part of a wave 4. Okay, so we probably form like A, B, C, D, E. So maybe tomorrow when the data release comes in for the UK and maybe also UK budget, then possibly we might be able to long this one around 150 area, 150, I say 150 area somewhere. You can see we have a rising trend channel. So on the bottom baseline, if you get a price action coming into the area 150 70 to 150 area, then I think we could be looking for a long entry there. That would be fairly a short-term play to some extent, like so. Because this will be 1, 2, 3, 4 and 5, and therefore that 5 could be taking us to somewhere in the region of this previous area here at 152, from which we would then get a much deeper retracement back down, like so. And that would be an area to go long for, like a longer term, but initial one will probably be by like 152, short-term upswing and then retracement before we continue higher. So pound is I think relatively strong after having been sold off very heavily until it formed the bottom last week. And the other pair we are looking at is Canadian dollar. So on a Canadian dollar, it looks like we've got this here as a wave 4 nearly finished now, so we're moving up in a wave 5. So it's 1, 2, 3, 4 and 5 on this daily chart here, and we should, when we get to the top and when the 5th wave is finished, we should get a strong divergence on the RSI. So I think we are in a final stage of that. So really speaking, with this one, we might get back to the previous high here at 1.034. So retesting that or making another minor higher high, but at the moment I am not too sure how far, because you can see on this 4-hour chart that we've already got wave 1, wave 2, almost wave 3 done, small pullback, wave 4, and maybe another push higher. So we might actually finish up getting this one like a failure wave 5, which means it won't go to the full extent of retesting the high. It might stop short and then possibly start declining. So that suggests that the dollar index must be close to topping out, and that we noted that when we were looking at dollar index, probably not going all the way to 84, maybe even topping out around 83.50 area, unless of course if the euro becomes quite weak, and then the dollar index can start running up. Okay, so we'll come to euro dollar then. On the euro dollar, I am still of the opinion that we've got either two of the pattern, and the least bullish pattern is this one here, which would call for this one wave up from low to September high as a possibly W, ABC retracement as a wave X, then we've had a Y, and then this retracement as a wave X, and then going up there as a wave Z to retest this final high, and then have a deeper retracement back toward the current level. Or we could be in this section here where we've got A, B and C. That would be A, B and C. So this high is the February high, then we have a wave X, and then we'll get another A, B and C to the upside. This coming down, to me so far, regardless of how others are labeling them, and I do admit I'm not completely satisfied with the wave count that I put on there. However, to me, if I look at my daily chart, you see that to me is looking like it's taken so long to come down here. It's taken on nearly 32 days. It's taken over a month to come down here. 32 bars, that is on a daily chart. If you look at this one from here to there, it took 56 days. So in fact, if you count it from here, which is the same level, count it from there, see it took 38 days. So 38 days, and coming down so far, it has taken 32 days. So it's taken almost as many days as it went up from here. But look at the way it's been spiking up and down, up and down, up and down in terms of how the prices have been moving. So I still think this is a corrective wave. And what is it correcting? It's correcting, I think, this last leg up. So I still think that this is either some kind of a wave X. So this might be wave X, you see, like I suggested here, that if I was to put an alternative wave, then this here could be wave W, X, Y, X, Z to follow this one here. So I still think the low can form, and we've got 50% retracement been tested today. We do have a clear divergence on the RSI on daily, although divergences do fail, but whilst it's holding, there is a potential for that divergence to form. And in terms of the time symmetry, you see from this low to this we had like 86 days, and in the same way from this low to this where the vertical line is 86 days. So we have now gone over by about 3 days. So it's still within realm of possibility of a potential low forming in that area, but at the moment it is appearing very trying and very testing to see if the low is actually going to form. But we have a divergence on the daily, we have a divergence on a 4-hour that is currently still holding. So I think we do have an area where we are likely to form a bottom, and based on my my wave of counting, which I've got like wave A, which are triple zigzag, wave A, wave B, and in that case we'll look for a triple zigzag here. So we got W, X, Y, W, X, and then A, B, C as the Y. Then we got A, B, C back up as an X, and in which case we got wave A, we got expanded flat as a kind of a B, and then coming down for C. But it is getting very complex, and it's the very fact that it's moving sideways like this that makes it very difficult to actually count the waves. But broadly speaking, see this down trend line, most of the price action at the moment is still below that trend line, so we really need price to reclaim territory above the trend line to confirm that that downtrend is over. But I certainly think so. On a 4 hour is still holding, so we could form a low, or we might actually spend a bit more time chopping about in this area before forming the low toward the end of the week and then going up. Okay, so that's a pound. The longer term in the actual overall direction, there was a chart I was looking at a moment ago in this dollar index here. You see, very long term. Let me show you one of the other chart on this, where I've got on here. So this is the euro dollar on the top and the dollar index at the bottom. See, dollar index at the bottom has got, if I can show you quickly, you can see we've got a trend line coming, connecting the high we had back in June 2010, and then we got lower high in July 2012. We've come back into that territory, and we'll see that a bit more clearly on the actual dollar index chart. And then on the euro, we have this two parallel lines coming at the top, and we've come into the proximity here where we formed a high in February, 1st of February. We have declined, but we're in an area where we could find a support. We've got a 50% retracement of the entire rise from the low back in July to the February high. And secondly, we've noted in the euro we've got a divergence on the daily and on a 4 hour on the RSI. But the point I was trying to show you here is that in that context, you look at the RSI, look at the dollar index is come back into the area of that declining trend, and we are almost about to do a double top, and potentially we could form a top here, which means that we would drop here. Even if we don't develop a new complete downtrend, we would actually drop, maybe come back to this rising trend line as a potential support. So we are still in an area where potential a bottom could actually form, and then we would have the dollar index declining and the euro going back up, and an absolute minimum is we would find the euro to go back up to retrace at least something like 50% of this decline. So I will be looking at somewhere around 133 to 134 area maybe as an absolute minimum, but ideally would go back to retest the February high, and dollar index then would come down to something like 50%, around 80.8 or 81 as a minimum, and if it continues declining strongly, then we would find the euro will continue to move higher. So with that understanding, we'll go over onto this chart. This is the area we are talking about. This is the double parallel line coming from the top as a potential resistance, because what we've done is we've connected the high, and we've connected this high, and we've projected the same parallel line from this secondary high, which came into effect back in July, and we've come right back into that territory. And longer term, my view is that we are coming down in this strong downtrend. And on one of the other videos you will see that on the dollar index, I have been labeling this wave here potentially as a wave 2. So it's 1, 2, 3, 4 and 5. So that completed a wave 3 of a larger degree, and I still think that this is the wave 4, and we are doing a running flat on a wave 4. And the point I was going to make is that, see, on the RSI, if I do this one weekly, then RSI is actually forming a contracting triangle, and the price hasn't quite formed a contracting triangle, but the RSI has. So if the RSI fails here and the price fails here, then what we've got is we've got from the low here, effectively we've got A, B, C, D, E. Let me do the other way. So we've got wave going from the low here, we've got wave A, we've got A, B, C as the wave B. So we have wave A, wave B, and then this contracting triangle becomes, so we've got wave A, B, C down as wave B, C, D and E. So it works out like, let me just draw it out on here. So we've got wave A to there, then we've got wave B to here, so that is A, B and C as the wave B. So wave A, wave B, wave C, D and E. Okay, so that's what we got, like so. So based on the triangle on the RSI, we may be completing this triangle around current level. And as far as the price are concerned, then I think on the price what we got is wave A, then you got A, B and C down here as a wave B, then we are making a wave C, D and E, and that would complete. So I think from that perspective we are fairly close to completing, and what would confirm that this is correct is after finding that we have topped here, it's the kind of price action we get subsequently. So if, for example, we get this minor rising trend channel or the trend line, the lower trend line of the rising channel, once that breaks to the downside is how it breaks, what kind of a price action we get. If the price action is very strong, then chances are that we've topped and we would actually start making a new downtrend, and in which case euro will then obviously start going up very strongly, and likewise some of the other US dollar based currency pairs would begin to show strength against the dollar. So I am still expecting dollar index to top out soon, either in the current area or up to 84, 83.50 to 84. 83.50 is an ideal actually, which is where I think most likely the high is going to be. Otherwise we might even get a high, not far off from where we are. Currently, like this could be A, or 1, 2, 3, 4 and 5. We might get, as I said, like a ending diagonal, in which case we probably won't go very far to the upside, and that would suit the position we just identified on the euro dollar, because we don't want a euro dollar to decline too far to the downside. We are close to bottoming, and if the euro bottom, then likewise we said euro CAD, euro Aussie, euro New Zealand, they're also looking for a little bit more weak side but soon forming a bottom. So that's my view. Based on the analysis, I think the dollar index should top soon, but it has a bit more upside left. Whilst the equity market weakens, dollar index will strengthen, and euro and other US dollar pairs will weaken against the dollar. but that might continue for rest of the week. We might not actually get a proper low until back end of the week because of the situation with the Cyprus that currently is ongoing. Okay, so that is all for me for the time being. I think some of the long-term swing trades are lining up. We'll have to be patient. The price actions on some of the pairs are not very clear, and it's very choppy and up and down, and in which case it's very difficult to actually plan a swing trade, because whilst you might get 150 pip kind of a run between high and a low of that particular range, it's not something we can actually plan for, because sometimes when the thing move as a result of these news announcements or some other political announcement, you get very fast run that sometimes 60-70 pip done in a space of 5 minutes, and that sort of a thing you can only plan for or trade if you happen to be doing live trading and monitoring, and happen to get the timing right and happen to be on the right side of the market. But otherwise I think it's very difficult. And so I'm focusing on larger swing and trend change where we can get ourselves into a position, and we're hoping then that we'll be able to ride that for much longer, for a better profit and better risk management, and be able to also build the position so that subsequently, without risking more or taking more risk, we'll be able to build a reasonable position by starting small at the outset. Okay, so as usual, any comments or questions, please do let me know, and I will be more than happy to address them in our next session. Tomorrow we will be going through the yen pairs, so I look forward to you joining me then.